Meantime, S&P and NASDAQ coming off their worst day in about a month. Russell 2000 closed below the 50-day moving average as volatility now picks up on the street. Joining us with his outlook this morning, Evercore ISI Vice Chairman Krishna Guha is with us. Krishna, it's great to have you. Good morning. Thanks for being with us. We had Eamon at the top of the hour talk about SCOTUS, and you guys have been writing about how these arguments are expected to go. Do you have a call yet on what the decision might be?
Well, I defer to my colleague Sarah Bianchi, who is the deputy U.S. trade rep, so she's a real expert on this. And her view is that the odds that the court upholds Trump's tariffs are more like a 50-50 relative to, say, betting markets that have more like 60-40 in favor of the tariffs being overturned. So as a firm, we think there is a higher probability than consensus that Trump could prevail in this seat.
If he doesn't, is it market negative in that deficit worries, raised bond yields, there's more confusion, there's the prospect of the administration getting more creative when it comes to other types of tariffs?
So I think it's a mixed bag. I think there are some negatives, but I also think there are some positives. So you mentioned the negatives, right? Near-term uncertainty as they reshuffle the legal authorities to reinstate 80-90% of these tariffs, the need to pay the rebate. But on the other side, there would be something positive about shifting to a regime where the administration can't just shoot from the hip on tariffs, as they can under the IEEPA authorities, but have to go through a structured 301 or 232 process. So near-term, more uncertainty, but potentially medium-term, more stability in the tariff regime.
What do you make of the volatility lately and whether or not, whether it's Bitcoin or some of the chip-related names, AI-related names, you think valuations are becoming a real concern? And doesn't that kind of collide with the Santa Claus November seasonality we are expecting?
So, yeah, for sure. There's a big tension here between the classic seasonal dynamics and the concern that even if you really are a buyer of the big AI theme, the valuations run a lot, and we may need to digest before we can push on, maybe even take some profits, and always with some risk that becomes a bigger drawdown. Obviously, as you guys have highlighted, another component here is that Fed December cut, less certain than it looked. We still think it's a 65% type probability. But my view is that the way this thing trades internally at the Fed is that they do one more cut, but then they signal that they're taking a timeout in early 26, and I don't have another cut until the new guy is in as chairman at the first meeting in June. So I think the market still has to digest also. Just a little bit less certain Fed trajectory, and you probably are going to get that debt cut, but you're probably not going to get that ongoing string of cuts that some at least will hope.
New guy or girl, gal. Wonder if Bowman's still in the mix.
Absolutely.
So what about the reporting that I just laid out? The fact that services appears to be accelerating, which is the key part of the economy, but manufacturing, freight, goods is weakening. We saw that discrepancy in the ADP report. We're seeing it in the data. Where do you think that nets out?
Yeah, well, it's interesting, isn't it? Because, of course, the tariffs were supposed to strengthen manufacturing, strengthen industrial production. And at least at this juncture, we're just not seeing evidence of that. I think, there's a lot of disruptions in supply chains. Remember, we're tariffing intermediate goods, inputs that go into the products that U.S. manufacturers make. And I think we're finding out that is a costly process adjusting for those, extra increased input costs. The services side does seem to be hanging in there. But, of course, as you pointed out, again, even services is bifurcated. Everywhere we look, we see this K-shaped economy. We see it by sector between the secular AI names and the rest. We see it by the consumer between the high-end consumer with the wealth gains, the low-end consumer with less real labor income growth. And when you look at the consumer discretionary stocks, as you cited, it does remind us that, yes, services in general in the round is looking fairly solid. But within that, we see significant signs of weakness in those areas that pertain more to the lower-end consumer.
Yeah, that reflects the commentary from some corporates this morning. McDonald's, just one of them. Krishna, appreciate it very much. A lot of short-term and long-term questions at play. Good to see you.